Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about tube investments, a very interesting ancillary play in the auto industry. Let's understand whether the valuations are ripe to invest or whether you should avoid it. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now, about Tube Investments. It was established in 1954 and they manufacture diversified auto components, have businesses all across India. They serve automation, engineering, cycles, metal products for vehicles. So they make all these kind of products, engineering products, just shafts, etc., automation products for vehicles, and even for cycles they do it. So bicycles I'm talking about, and different types of metal products they also manufacture. So if metal prices go up across the globe, tube investments will suffer, and currently the metal prices are pretty depressed, and that is how tube investments are lowering their expenses because of that. Market cap of the company is around 9,000 crores. If you look at the financials of the company, then in the second quarter of FY20, I'm not taking the third quarter, but Q2 FY20, the sales have gone down by around 25%, where the profit has gone up by 14%. This was primarily because of lower taxes by the government, with the lower tax regime in midway through the financial year, and relatively high debt is a problem with the company. So unless there was a lower taxes, tube investments would have put up a very meager profit because of the lower sales. And high debt is also a cause of concern, because most of the companies in this sector like Motherson Sumi, Sundaram Fasteners, etc., have lower debts comparatively. Although the return on equity for the company is pretty robust at around 19%, and also the operating profit margin is decent at around 13%. If you look at the performance of the stock, then the stock is up 2.5 times in the last 2 years. So the move have been appreciable from around 200 to 20 rupees. It has just appreciated like there's no tomorrow. I think around 130, 140 rupees around 2.5 years back. It was trading at very attractive valuations, but now it has moved up a lot. But it has also moved up in difficult circumstances. So the auto industry has been not doing well over the last 18 months. If you look at the top auto companies per se, their sales have declined over the years. So it was suggested that all the auto ancillary companies would suffer, but then markets have their own view about stocks, and markets look at beyond 1 2 years. And probably what markets are looking at is that over the next 15 to 18 months, these problems in the auto industries would subside, and these are not structural issues but seasonal issue and cyclical issues. And probably in two complete 2 years of cycle, autos would come back, and then we'll have 5 6 years of really good time in autos. And that's why people are looking at good auto ancillary companies and investing into it. You look at strong institutional holding, and around 87% of the stocks are with you can say strong players, and only 13% free float with the retail players. When I say free float, it means 13% of the stocks are with the retail investors who try to, you would say, speculate on the stocks, trade on the stocks on a weekly, daily, or monthly basis. Whereas those people who have held the stocks, around 87% of those, probably buy it for some years, 3 5 7 years. Strong management, very clear management, transparent management, and the dividend payout, as with all other auto or auto ancillary companies, the dividend payout is pretty good in tube investments. If you look at the technicals of the company, then there is a strong support or short-term support at around the 480 levels, and it is hovering around these levels. The 200 DMA is around 420 levels, so any decline between 420, 480, 490 rupees a share would be a good buying opportunity, keeping a stop loss at around 420 if declines come in. You can see big up move in Tube Investment, and remember it is a slightly smallish cap company. 9,000 crore is not quite like a 50-60,000 crore company. So 9,000 crore company with a low equity base or low equity in the market, you could see big moves coming in if the volumes pick up. So you have to take that into consideration, that the volumes are not very great in the stock, so that you could see volatility in the stock. So big up move is expected above 510 levels, so you can say 20-30% up move above that. And remember that mid caps are coming back into fashion. So times of mid caps and small caps meltdown that took place between 2018 till early part of 2020 has gone, and we are seeing stabilization in mid cap, especially even in small caps, and very good companies in mid and small caps are doing well and making new highs. So Tube Investments could do that in the coming weeks and months. A high deliverable percentage, which is good, which shows that people are willing to buy into the stock and hold into it. If there is massive selling in some other, if in the stock, if there would have been massive selling, then I would have said that there is high level of deliverable selling. But here the stock is making new highs, close to new highs, and going up. So it is quite clear from the delivery percentage of the stock that people are willing to buy into the stock and hold it for a longer period of time. So what needs to be done in the company? Well, accumulate over the next 18 months. There's no hurry to buy now. Probably any declines when you see in the next couple of months of around 8 to 10% from the highs. So if it goes even higher and makes a top and then comes back around 10-12%, go ahead and buy into the stock. Wait for major declines into the stock to buy. So even if it goes down 15-20%, go ahead and buy, because once the auto cycle revive, Tube Investments itself would do well. So you have to take that into consideration, and I believe over the next year and a half, things will improve on the auto front and we'll see the cycle come back into fashion. So these are the next 12-15 months to buy into the stock. Buy such stocks which have good ROE, return ratios, profitability in a staggered manner as an SIP. So do not invest more than 5% of your portfolio, because if you lose all, then you lose only 5% of your total investment. And the economy pickup will further boost numbers. That's what I'm trying to say, that once the economy picks up, it's around 4.5% at the moment, the Indian economy 4%, 4.5%. Any slight improvement in the economy would lead to a massive improvement in stocks which are related to economy, which are related to discretionary income, like autos. And autos are directly related to the economic pickup, because people will only buy into bikes and scooters and cars only when they have more money, and they'll have more money only when they'll have good jobs, which will happen only in times of very good economic condition. So this was my video on Tube Investments. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.